My name is Ronnie Michael, Certified Public Accountant, and this is the Personal Finance Playbook. Improve your finances, improve your life. The title of today's episode is Smashing Tax Myths, Paying Your Fair Share. We've all heard politicians and people in our social circles say it. The rich need to pay their fair share. But have you ever stopped to ask, what exactly is your fair share when it comes to taxes? Let's travel back in time to 1913, the year the modern federal income tax as we know it today was born with the Revenue Act of 1913. This was the first income tax law passed after the ratification of the 16th Amendment to the Constitution. Previously, a federal income tax was considered unconstitutional. Here are some facts about that first income tax law that will blow your mind. The tax rates under the Revenue Act of 1913 were incredibly low by today's standards. The lowest tax bracket had just a 1% tax on income over $3,000 for single filers. Yes, you heard me correctly. It was a 1% tax on income over $3,000. For married couples, the threshold for this 1% tax was slightly higher at $4,000. The tax rates then progressively increased as income increased, with the highest rate being just 7% on income over $500,000. Now, let's adjust these numbers for inflation to really put them in a context that we can understand. According to the Bureau of Labor Statistics inflation calculator, $3,000 in 1913 is equivalent to about $100,000 in today's money. That means if you were single in 1913, you could earn the equivalent of $100,000 in today's money without paying a single penny in federal income taxes. Married couples could earn $135,000 in today's dollars without paying any income tax. And that top bracket threshold of $500,000, that's equivalent to about 17 million in today's dollars. Someone in 1913 could make the equivalent of $17 million in today's money and pay less than 7% in taxes. Let that all sink in for a moment. Now, by comparison, in 2025, the standard deduction for single filers is only $15,000. That means you only start paying federal income taxes after earning $15,000. The top tax bracket of 37% kicks in at just $626,300 for single filers. If Americans only paid income tax on income over $3,000 in 1913, and $3,000 in 1913 is about $100,000 in today's dollars, then you can probably guess that many Americans back then didn't have to pay income taxes. And you'd be correct. In fact, in 1913, only about 1% of Americans paid any federal income tax at all. In today's environment, of course, we know that things are very different. In 2022, approximately 68% of Americans paid federal income taxes. The top 1% of income earners paid about 40% of all federal income taxes collected, while the top 10% accounted for about 71% of federal income taxes collected. The top 50%, i.e., the top half, of income earners paid 97% of all income taxes, which means that the bottom 50% of income earners accounted for only 3% of income taxes collected. So, what does paying your fair share of taxes actually mean? There's one last fact about the 1913 Revenue Act that I want to share. As Congress deliberated over the first modern income tax during the year of 1913, there was tremendous criticism that the law was too complex for ordinary Americans to understand. Elihu Root, a senator from New York, wrote, "I guess you will have to go to jail. If that is the result of not understanding the income tax law, I shall meet you there. We will have a merry, merry time, for all our friends will be there. It will be an intellectual center, for no one understands the income tax law except persons who have not sufficient intelligence to understand the questions that arise under it. A complicated tax code that seemingly no one can understand? It was all there from the beginning. I guess there truly is nothing new under the sun. What do you think? Does this apply to your life? Leave a comment below, and thanks for watching.